Hey everyone, welcome back to the channel. Today we're going to be diving into some of the best dividend stocks and ETFs of all time. The kind of investments that have not only grown in value but have paid you to hold them along the way. So if you're looking to build a passive income stream or you just wanted to make your money work harder, this video is for you. So before we dive into the specific stocks and ETFs, I just want to break down what they are. So a dividend stock is a company that pays out a portion of their profits to their shareholders regularly. And a dividend ETF, on the other hand, are baskets of companies that give you instant diversification and exposure to multiple dividend-paying companies that also pay out regularly. Now that we got that out of the way, let's start with some individual dividend stocks that have stood the test of time. First up on our list, we have J&J, or Johnson & Johnson. They've been a dividend king for a while, but in 2025, it's still a top pick thanks to its diversified healthcare portfolio and a steady performance despite the pressure on Big Pharma. Number 2 on our list is ticker symbol KO. Coca-Cola remains a timeless dividend play in 2025, even as consumer preferences shift. Coca-Cola has managed to expand globally and invest in low-sugar alternatives while maintaining a solid dividend yield of around 3%. And in today's uncertain consumer section, it's a rock of stability. It's not going anywhere. Number 3 on our list is going to be Procter & Gamble, ticker symbol PG. They're still delivering in 2025, benefiting from its pricing power and brand loyalty across essentials. While consumer staples have faced margin pressure, Procter & Gamble has navigated the inflation and supply chain issues better than most, continuing its streak of 67 plus years of dividend hikes. Next up, we have a company that doesn't really strike many people as a dividend stock, but in 2025, it's one of the smartest plays for income investors. And that ticker is MSFT, or Microsoft. Its cloud business keeps growing, and it holds over $100 billion in cash and has been increasing dividends steadily over a decade. A rare combo of growth and income, and it's sure to continue. Up last on our list, we have ExxonMobil, ticker symbol XOM. Energy has cooled off a bit since the 2022-23 highs, but Exxon is still a top dividend payer in 2025. Especially with oil stabilizing and global demand still strong, ExxonMobil's focus on cost control and low-carbon investments keeps its dividend secure and still yielding over 3.5%. Now, if you want diversification and less research, these dividend ETFs are great for hands-off investing. First up on our dividend list is going to be the Vanguard Dividend Appreciation ETF, ticker symbol VIG. Now, VIG continues to shine in 2025, mainly focusing on companies with a decade or more of dividend growth, and recently tilted a little bit more towards the tech and industrial sectors with their strong earnings in the current macro climate. This ETF, with low fees and a strong long-term performance, makes a great core holding. Number 2 on our list is going to be one of my personal favorites, is Schwab US Dividend Equity ETF, ticker symbol SCHD. Now, SCHD remains a fan favorite, like I said, in 2025. It's rebalanced to focus more on the cash-rich, lower debt companies, crucial in the high-rate environment, with a yield around 3.5 to 4% and a strong dividend growth rate. It's one of the best set-it-and-forget-it ETFs out there if you just want a little bit of extra income with a stock price that is only going to go up. Next up, we got SDY, the Spider S&P Dividend ETF, a true staple for dividend investors. SDY targets companies with at least 20 consecutive years of dividend increases, which means you're getting exposure to some of the most consistent and shareholder-friendly companies in the market. In 2025, it's quietly held its ground, especially in the value space, which has been renewed interest as growth stocks have cooled off. And one thing that makes SDY stand out is its sector tilt. It's heavier in areas like utilities, industrials, and consumer staples, sectors that tend to shine when the economy slows down or investors get more nervous. And that's exactly what we've seen this year. With uncertainty around the globe growing and interest rates, investors have been flocking to stability over speculation. SDY has benefited from that trend. And now compare that to something like SCHD, which has more exposure to tech and financials. SCHD can offer a higher yield and stronger performance in bull markets, but SDY tends to hold up better when the markets get kind of choppy. So if you're looking for a dividend ETF with a long-term track record, strong defensive sector exposure, and a focus on consistency, SDY deserves a top spot on your watch list. Now number 4 on the list, let's talk about DVY, the iShares Select Dividend ETF. If your priority is pure income, then DVY is one of the most popular picks out there. This ETF focuses on high-yield U.S. companies, and in 2025, it's become a go-to for income investors who aren't just looking for long-term growth, they want bigger payouts right now. Unlike some of the other dividend ETFs that target dividend growth or quality, DVY leans into companies that already offer high yields, often in the range of 4% or more. But here's the trade-off. That higher yield usually comes with less exposure to high-growth sectors like tech. Instead, DVY is heavily weighted towards utilities and energy sectors that may not lead to the market in bull runs, but provide a much more consistent, predictable cash flow. This makes DVY especially attractive in low-growth, high-rate environments like we've seen so far in 2025. And investors aren't chasing the next big thing. They want steady, reliable income, and that's exactly what DVY delivers. It's not as flashy as something like SCHD or as conservative as VIG, but if your focus is cash, DVY is a strong contender in any dividend portfolio. In 2025, with uncertainty still hanging over growth stocks, combining high-quality dividend payers like Microsoft or ETFs like SCHD can give you stability, income, and long-term upside. And just some final thoughts to leave you with. Dividend investing isn't a get-rich-quick scheme. It's about building wealth and income over time. These stocks and ETFs have proven track records, but remember, always do your own research or talk to a financial advisor if you are confused. If you found this video helpful, smash the like button, subscribe for more investing content, and comment below. What's your favorite dividend stock or ETF? Thanks for watching, and as always, invest smart, stay patient, and let those dividends roll in. See you in the next one.